Mark, thank you so much for joining us. You've spent a lot of time understanding the African aviation market. What are you seeing?
I see a pretty significant coordination problem. But first of all, if I have to take the opportunity, if you don't mind me doing so, to congratulate South Africa on winning the World Cup. It's great. As an Irishman, it meant that we have an Irish gold medal winner through Felix Jones.
Oh, really?
And of course, as a Munster supporter, I'm glad that Rassi Erasmus came back to do such a wonderful job. But I should also say that I'm quarter South African myself.
Oh, really?
My mother's mother was born Ruth Morris, and you can still visit Morris's pharmacy on Hibernia Street in George. So I've got skin in the game, you could say.
So you've come home.
Yeah. Accidentally, Air Madagascar called me out of the blue 21 years ago and had a problem with a particular aircraft type, which introduced me to African aviation. And quite often in those past 21 years, I've done quite a lot of work with African airlines, occasionally with lessors on the other side of the table relative to those airlines. And it's given me an interesting perspective, a privileged perspective in some ways, but a perspective on the difficulties for owners, senior management and workers in African airlines and the challenges that they face.
And some of the challenges, I would imagine, at the top of the list is financing an airline, because it is probably the most expensive exercise you could go. The margins are really small, fuel prices are fluctuating, so actually owning and operating an airline across the continent is probably really hard.
Very challenging. Remember, Africa, a lot of Africa, and of course it's 50 countries plus, but a lot of Africa is actually landlocked, just in a practical sense is landlocked. The cost of getting fuel to those landlocked points where airplanes need to refuel, having brought either cargo or passengers to an interior African destination, that's an expensive exercise. So cost of fuel for sure. But there's also a question of the certainty of supply of aircraft. My background is aircraft leasing. So even though there are many, many other issues, resource related, one of the big ones is how to finance aircraft. Traditionally, aircraft have been financed through either export credit financing or operating leasing. Export credit financing, for completely unrelated reasons relative to Africa, has become far less dependable and more expensive in the past decade. But that past decade is really key in Africa's development, because while the rest of global commercial aviation has been profitable and everybody has been making hay partly for a rainy day, I'm sorry to say that African airlines, due to this coordination problem that I can expand on a little bit more if you want, is or has accumulated hundreds of millions of dollars of losses.
I mean, that's true, specifically for South African Airways, our national carrier.
I'm sorry to say, yeah.
But, I mean, if you look at Ethiopian Airlines, they're doing extraordinarily well. They're one of the largest networks, officially, I think, the largest network across the continent. Rwandan Air is doing extremely well too. So is that really the case in Africa?
Well, look a little bit deeper. Ethiopian Airlines is, in a sense, the exception that proves the rule. Ethiopian has, unfettered by government, been able to, I don't want to be inflammatory, but has been able to exploit the opportunity presented by the inadequacy of commercial air transport on the continent. And because the government has been so supportive and yet so distant from management, management have been able to proceed on a commercial basis and have become the darling, in a way, of a lot of suppliers. Put another way, they've been able to create a virtuous circle of behavior where they've been able to make some profits, they're able to reinvest those profits. Because they're well run and profitable, they get lower finance. Because they have all those advantages, then they can buy in greater numbers and get greater discounts, which brings down unit costs. So they've embarked on that sort of virtuous circle, which has been done elsewhere by the likes of Singapore Airlines. Even Ryanair in Ireland have done something similar. And they go from strength to strength. it's a challenge for them too, of course, the coordination problem, because what they have done is they have tended to develop equity partnerships with other African airline owners, which no doubt is quite a demand on management time. So there's no ideal solution as such. But
sorry, I have to interrupt you here quickly. My last question to you: if you were to advise on the transaction of SAA, what would you advise?
There is no answer, I think, specifically for SAA without taking into account the broader African context. So, given South Africa's location, it's ideally prepared for a hub and spoke operation if its spokes are nurtured for that hub and spoke operation. And if you look all around Southern Africa and Central Africa, you can see that those spokes haven't really been nurtured so well. So our proposition for the past 9 years, which ebbs and flows in terms of appeal, is that a public-private aircraft leasing company be allowed to emerge. The African airlines are quite supportive of the idea. Interestingly, private lessors are supportive of the idea. And the reason that I'm here is because I think that multilateral development banks and development finance institutions have a far more significant role to play. If, in a sense, above the participation of airlines, there was an injection of a new disruptive change agent, which is a dedicated public-private aircraft lessor, which encourages good behavior among the airlines in the sense that they rationalize what they're doing and they tend towards a more rational system, that can both catalyze better, safer, more efficient, more affordable air transport for the travelling public, and it can stymie some of the airline behavior which doesn't do anybody any great benefit because it causes losses to be made by certain African airlines, and every cent that's lost, in a sense, is a cent lost to Africa, and on a multiplier effect many times, because if without safe, efficient, and affordable transport intra-Africa, the ability to make gainful employment for the huge population growth that's coming at us in the next 10, 20 years will be that much weakened.
Yeah.
And safe, efficient and affordable air transport is known to add maybe 1 to 2% GDP growth per annum, which compounds over time. And so to the extent that you don't have safe, efficient and affordable air transport, it's Africa's loss.
Yeah, it definitely is. Mark, thank you so much for your time today.